Hello, and welcome to this week's Profit Maximizer Moment. The show, of course, is dedicated to helping business owners dramatically improve their bottom line with our weekly profit maximizing tips that you can use now. I'm your host and coach, Wayne Belisle. I'm also founder of a local CPA firm that works with business owners to help them make more money and keep more of it from the IRS, all legal. All right. I do this with our profit coaching programs and our tax planning systems, which saved our clients over $7 million. Like I said, we love our clients, but we don't want to share a jail cell with them. So we stick to the law and the regulations. Today's video, we're going to learn about 5 steps that you can help your tax preparer. But yeah, 5 steps to help your tax preparer save you money. All right. But before we get to that, support for today's show, I forgot to get ready, is brought to you by Profit Maximizing Publishing, which published my book, The 90-Day Profit Reset, which shows you how to gain your independence from reduced cash flow, shrinking margins, and evaporated customer base. I really should have this memorized by now. In this book, you will find chapter after chapter, idea after idea about how you can turn your business and reset your profits from red to black in 90 days or fewer. Even entrepreneurs who are making money will benefit from my book by learning how to make even more money. Like, I think I got this thing for like $4 on Kindle. Paperback is probably $20, but there's a lot of really, really good information in there. And if you're running a business, you really got to have it. I'm, sorry. I know I wrote it, so it sounds kind of like tooting my own horn, but it's a good job. I'm sorry. A lot of really, really good information in there. All right. First, hard to believe, tax season's almost over. Thank the Lord. The final deadline due date is Monday, October 17th. Though for us, it seems like it never ends because we jump right into tax planning time, which we've already started. So if you haven't filed your tax return, get it in as soon as you can. Even if you miss the deadline, you want to reduce the penalties as much as you can. Ignoring your taxes really isn't the right solution. And truthfully, just dropping off your taxes at your tax preparer and saying, here's all my junk, and not taking it, I always treat my clients as part of the process. Okay. We're not H&R Block. We don't prepare it while you're here. Most CPAs don't. I have somebody enter it. Usually a second person reviews it, and then I do a final review. But we also sit down with the client when they pick it up, because I consider them part of the final review process, because you know your stuff better than us. We're doing 500 or 600, 700 returns. You got you. And you know your stuff. We're pretty good. I mean, we ask the right questions most of the time. But let me give you 5 key steps that I found over the time. Get organized first. All right. Don't just throw your receipts in a big box and drop it off at your accountant's office. Not only will this make your tax preparation bill higher, secondly, we don't do those. We'll just tell you, this is how the tax return is going to be X amount. If we do the bookkeeping, it's going to be even higher. And if it's too much bookkeeping, we're going to send you to a bookkeeper. It'd be better to know what you did. Plus, more importantly, you know what you did and what happened to you better than your tax preparer does. And I'm not going to spend a lot of time going to, miscommunications that happen, because they happen all the time. Provide a recap sheet totaling items in each category would be best. Have a meeting with your tax preparer before you do the return. Unless your return is very easy or it's no big changes since the prior year, it's a good idea to sit down with us, okay? And to go over any unusual transactions that may have occurred, ensure the preparer understands your information, that we have all the carryovers from prior years, that we have depreciation, that we have tax payments. For sure, let us know you had a new baby, or you got married, or you got divorced, life changes, or somebody passed away. All right. Have the same preparer do both your personal return as well as your corporate or partnership return. It's much easier for us as a preparer to do both returns so they're filed consistently. One return is often dependent upon the other, and a lot of times I've done the corporate return, but I haven't done the personal. I know it's possible we can mess things up. Other times I'm doing the personal and do the corporate, and I can see, that really shouldn't be a partnership. There should be an S corp or something. Number 4, improve your accounting records. If you don't have good accounting records, I'm going to promise you right now, you're paying more than you should. All right. Every time. When you don't have good accounting records, it's very easy for the IRS to recreate your income, because it's usually reported. Plus, they can just go get bank statements and see what's there. The IRS comes up with formulas to check on the reasonableness of the income you report when compared to product costs and labor hours. I remember an audit I went through on a pizza person They looked at how much they bought, used their formulas, and said you're missing about 15% of your income. Talked to him a little bit. He was getting the extras and selling them on the side. Makes no sense, you know. Expense deductions, though, the IRS doesn't even look at. All right, they don't care. That's your job. So that they require proper documentation that you can only get from good accounting records. Okay, with low cost programs that are out there like QuickBooks Online or QuickBooks or hell, even an Excel spreadsheet, it's really no good excuse not to have good records, and it's costing you money not to, because like I said, they can find your income, but I guarantee you are going to forget something you spent a year ago. All right. Call your accountant early or get an extension so you can improve your accounting records, and I guarantee it'll cut your records. Finally, and this is like one I say all the time because we're doing the extensions, don't wait until the last minute. Not a smart move. A couple of years ago, I reviewed all the errors that were made by our firm. There's not many, and truthfully, what I count as an error is different than what other people count as an error. We're the experts, so if there's something that came up and we're not the one, we didn't think to ask it, I count that as an error, even though sometimes I'm like, how would we know? But if we didn't ask the right questions, I think it's an error. 90% of the errors that occurred on tax returns that were finished a week before the deadline. So we try hard not to do anything complicated a week before the deadline. If you want your tax return to have proper amount of attention to detail, either get it to your accountant early or file an extension and file it after the rush. One caveat: don't procrastinate until just right before the extension deadline. I literally got people dropping off returns today. The deadline's Monday. Luckily, they're easy, or else we wouldn't do them. All right. Many of us are even busier in September, October, like I said, than we are in March and April. We're one of those. So truthfully, get it to us early. Look, you're part of the process. Take it seriously. I mean, you can end up paying 20, 25, 30% of your income to the IRS. So why wouldn't you pay more attention? We're going to get off taxes next week. Going to go back to talking about how to make more money and increase your profits. So, hey, until next week, let's make this our most profitable year ever. Thank you very much. Enjoy your weekend. And